We've got some breaking news. Elevator maker Otis Worldwide is escalating its efforts to limit the impact of tariffs. The world's largest elevator and escalator maker currently sources from 17 factories across the globe and is prepared to make certain parts of the company's existing facilities, taking all of those parts making to Florence, South Carolina, depending on the direction the tariff winds blow. Otis raised its full-year revenue forecast on strong service demand, but right now the stock is trending lower by just under 7% as China weakness weighs on first quarter results. Joining me now, first on Fox Business, it's an exclusive interview. Otis Worldwide Corporation Chair, CEO and President Judy Marks. Judy, let's start with your breaking news. You are now flexing your supply chain amid the tariff uncertainty. From where to where? Just South Carolina?
No, Liz, we have 17 factories, Otis factories, that produce product all over the world, local for local. We're very proud of our Florence, South Carolina factory. We opened it in 2012. As a matter of fact, we closed our Mexico factory back then to open our Florence, South Carolina factory. It supports our manufacturing in the U.S. and Canada and continues to produce quality product that everyone trusts. What we're looking at in our supply chain is very simple. We've built resilience up over the past few years to have dual sources in everything. We have a common product platform so we can manufacture any of our elevators product anywhere in the world. What we try to evaluate is the best place to do it, the optimal place so we're closest to installation, and the optimal price point to make us competitive so that we can continue to serve customers.
I mean, that just sounds like the absolute correct way to go. The question is, you are fleet of foot. You're ready to switch around your supply chain. I mean, I just wonder, how do you know from day to day? I mean, we had President Trump last night saying that he expected substantial progress with a trade discussion with China, and that he said, we will be nice to China. Then just a few hours ago, his White House chief communications officer said, no, we're not changing our rhetoric at all. How are you as a CEO dealing with conflicting headlines that seem to be pretty constant?
Well, I think it comes down to two words. You're resilient and you're calm. And, you know, we were born again. So we've faced some headwinds recently, but we've learned to deal with it calmly. I think what really helps us is our service business. If you look at our business, 90% of our earnings come from servicing equipment, service, maintenance, repair, and refurbishment. And that really, we service 2.4 million units all around the world. We're the world's leading manufacturer, installer, and service provider. And that gives us the resiliency because we don't have the tariffs and the trade war impacting. We have 72,000 colleagues who are out there, 44,000 of them servicing equipment and keeping the world moving. 2.4 billion people a day, Liz, use our product. And with that comes tremendous responsibility, but also gives us tremendous resiliency.
Well, Otis is the name in elevators, absolutely, but it's also the name in global elevators, and I'm wondering your China exposure. China, of course, I mean, there were times in the last couple of decades where entire cities were forests of cranes building skyscrapers. You've captured some of that business. What's happening right now with your China business?
Well, we just celebrated 40 years in China, and we believe we're viewed as a local company there with 17,000 of our colleagues in China. But we took a strategy on recognizing that the building couldn't continue forever. So we took a strategy on to make China reflect more like a mature business, like Europe, like the Americas to us, and like parts of Asia. In terms of Japan, Korea, Australasia. So what we did is we've been going through a transformation with our China business. Our China new equipment business, which is equipment only, and is now down 4 years in a row. But that's because the property business there has been down. But we have countervailed, we have replaced that business with service, which is now 40% of our revenue in China. And China's getting ready for a refurbishment cycle, which the Chinese government is supporting and is helping subsidize to be able to keep elevators safe, especially as their population ages. People need more mobility, and we've got the right product and services for that.
But I saw in your report that you attributed last quarter's top-line decline on lower activity and new equipment sales to China. You know, President Trump probably isn't too thrilled with companies, at least at the moment, doing that business. Not to mention that your biggest commodity that you use is steel, and there are lots of there are lots of tariffs right now on steel at the moment. So you're kind of caught between a rock and a hard place in that corner of the world. How are you going to deal with that?
Well, we do business in China for China. Everything we do in China, we manufacture in China with a Chinese supply chain, and we buy steel in China for China. Here in the U.S., we also buy steel. Steel is the largest commodity. When you think about an elevator, you think about the rails and the hoistway, the car, all of the equipment. There's a key steel component. It's 80% of our raw material and commodity buy, and we are able to find most of it local for local. Although I will tell you, one of the challenges we have, that formed steel, that final product, which is now getting tariffed, is coming into us from Canada. There is no U.S. supplier for anyone in the industry. Wow. We've certainly encouraged that supplier to move their supply and to start manufacturing in the U.S., and we would welcome, whether it's them or any other U.S. steel manufacturer, to be part of our supply chain to provide that.
That is interesting. I did not know that. So we need to get somebody up and running here stateside for that kind of particular steel. Judy, thank you very much for joining us.